welcome back. So you have re-woken up. Time for a keynote speech. Mr. Scott Riley, may I have you on the stage, please? It will be about, he's from Block Asset Technologies, the director of Block Asset Technologies. You're welcome. He will speak about why blockchain matters. Why does it matter?
Well,
Thank you.
As thinking about this, I started to think, well, why does it matter? But I thought it would probably be better to give some reflections and some insights in some of the things that I'm experiencing at the moment in London, and that will hopefully give you some of the context around not only why it matters, but why it's here now and why it's happening now. So I suppose we should get the big clock going, and first of all, a couple of thank yous. Thank you, first of all, for to the organisers, and thank you for you to listening in English. I've only ever mastered one language, and for those of you that have mastered more than one, I fully respect you. I also like to thank the translators, doing a great job there, and I only got through that second panel this morning with their assistance. And of course, thank you for attending. Now, I will just do a quick hop through some of these. So a bit of background, some of the generalisations that I'm observing, and a little bit about blockchain. But first of all, I wanted to do something so it shows the relevance of where this technology is to all of you in the audience today. Now, I was very encouraged by the take-up for the people that were familiar with the Commodore 64. I'm sure that there would be an even more universal take-up for those that are familiar with Pokemon. All a great lover of Pokemon. Some of you as parents may have come across one of the playground fads of the little trading cards. Now, your kids may migrate from the Pokemon trading cards into the next league of battling things, which is these Magic the Gathering. So I don't know if you're familiar with those trading cards, but when your kids migrate, that's a slightly more serious thing. One of the bases of these trading card games is you exchange them and you're trying to get the best cards. So a guy in the States decided, well, I'll create a platform for people to exchange these cards because they end up with piles of these exchanges. So of course, he created a little exchange to do this. It was called Mt. Gox. So you can see MT, Magic the Gathering Online Exchange. Simple premise, just for kids to be able to trade their trading cards. What he noticed was the biggest volume being transacted through his exchange was this thing called Bitcoin. And so it was then that Jeb McCaleb repurposed Mt. Gox into being a Bitcoin exchange. And so here we start to see the beginnings of what's happening with Bitcoin. That, of course, Mt. Gox is a sad and different story, but that's where, I suppose for me, once I saw Mt. Gox happening, that was the first time that Bitcoin really sort of started to hit my radar about what's happening in this space. So I won't go too much into the technology of blockchain, and I'm sure there's a wealth of information out there on YouTube. But just, I think of it as an analogy like a train. A train has an engine, a genesis block, and it has many carriages, many data sets that follow it. We're familiar with that in the capital markets. We're with the fixed messaging. So we have a message, and each message has its unique set of tags, the data that it carries. And so too we have, with distributed ledgers, we have a blockchain. A blockchain is nothing more sophisticated than a series of blocks which are chained together. So blockchain, for all of the excitement that's around the terminology, it is actually just a coupling of two pieces of old technology that we're quite familiar with. When network theory, we've had since the 60s, encryption, we've had since the 90s. What's clever, and what Bitcoin and Satoshi did, was just marry those two pieces of technology together. So now we have a series of blocks on a chain. Given that it's May, I thought that I would be remiss not to mention Pizza Day. So when we think about money, what is money? Money is a store of value, a medium of exchange, or a unit of account. So here, back in 2010, we have one of these nice Bitcoin developers that decides, I've mined all these Bitcoin, I've got all these Bitcoin, but I'd actually like to use them to acquire something. So he said, will anybody go out and buy me 2 pizzas for some Bitcoin? So eventually somebody came up and said, oh, okay, well, if you give me 10,000 Bitcoins, I will get a pizza delivery to your address for 2 large pizzas. So for 10,000 Bitcoin, which is roughly $18 million in today's money, he acquired 2 pizzas. So that is not even a decade ago. So when you think, like in 2010, people were prepared to exchange 1 Bitcoin at the value of a quarter of a cent, and now it's trading at around 1,800. So Bitcoin, it's made an impact and it's here to stay. What does DLT lend itself towards? And so when I look at the structure of what you can distribute on a ledger, it lends itself particularly well to supply chain events. And here I want you to start to envision a ledger simply as a ledger. DLT, blockchain, it's a noun. In English, a noun it's a thing. It's not a doing thing, it's not a verb. So all a blockchain will be is a chain of data. And there's not nearly enough talk about the data and the importance of that data and the structure of that data. So I think it lends itself to change of status events. Anywhere where you have a change of ownership, a change of title, a movement of something. So they're the sorts of things that I look for in use cases. Now, capital markets, I come from a capital markets background. I'm familiar with the whole process of the issuer, the trading, the clearing. In a previous life, I was one of the founders of Kynetix. Now one in four European equity trades is traded through Kynetix. So my piece of that was the post-trade model, and of course what's happening in post-trade. We have a store of value, we have transfer of ownership. So you can understand why my interest was piqued when I started to see the potential of what these ledgers could do. But what we notice, and here the point that I want to get across, is we're distributing something. And so when we distribute and when we share, we're sharing something with different people, different participators, so that the people in our community is changing, and we're starting to come up with a new word, a new ecosystem. So a couple of generalizations that I'd like to make. One is Bitcoin is not DLT. So you notice that I've started to change my vocabulary and not talk so much about blockchain, but I want to introduce the term of distributed ledger technologies. And so and even recently in the news, we've got all this information about the hacking that's been going on, and Bitcoin gets a bad name even there because somebody wants the ransomware to pay in Bitcoin. Well, it's just they want transfer of value. So don't associate all of the bad things that you see in the press with the good things that the technology can bring. The other thing is we notice this evolving landscape within the fintechs. And so what are they doing and how are they presenting themselves to the market? How do they make themselves investable? And so in the beginning, everyone was saying, okay, well, I'm a Bitcoin fintech. But now what we're seeing, and we look at companies like Itbit, which started off with its bank chain and was looking at bullion things, they've now split their company. And this is just symbolic of what's happening across the industry. So I just use them as an example. But they've decoupled what they're doing, their Bitcoin business and their blockchain business, from what they're doing with distributed ledger technology. So if you go to Itbit and you say, I'm interested in what's happening with the equity markets, capital markets application, they'll say, oh, go and talk to Paxos. If you say, I want to find out what you're doing in the bullion market, they'll say, talk to Paxos. So people are differentiating already in their service offerings what they're doing in Bitcoin and what they're doing in this great new distributed ledger technology space. We talked on the first panel, I thought that was very interesting, and we touched on a couple of generalizations there. Business needs to meet the technology, absolutely. And so the generalizations there is, number one, what's the context? If you're a fintech and you're selling into these broad-scope financial firms, what's the problem you are solving? So what's the value proposition? What's the win-win? All terms we heard in that first panel. The other thing, how do you get into the banks? Well, the banks are reorganising themselves. You can go in and you can talk to principal investments, You can talk to the head of ops who might want to process his more efficiently. You can talk to the head of the business who wants to recycle his capital more effectively. Or you can speak to the head of IT. Now, he might want to defend his technology stack. He might want to shave costs in his technology stack. But what the banks are doing is setting up innovation labs, innovation hubs. And now if you go along and you say, okay, I've got a fintech solution, the gatekeeper will be those innovation labs. So they're the guys that are holding the keys into the banks, in my humble opinion. The next thing is technology is just an enabler. Don't get swept up in, because I thought I needed to know everything about Bitcoin. I thought I needed to know about miners and hashing and all this sort of stuff. In fact, I don't. I need to know about as much, well, you need to be aware of the technology. That's a bit of an overgeneralization. But just as you use an ATM machine, you don't know how the software runs on that ATM. And that's how you're going to interact with the blockchain. It's going to be how you got here today, whether by rail or by car or by whatever. You don't know the gauge of the railways that you ran on. You might if you're particularly safety aware, but it's how you got here isn't matter. The technology that was used to get here doesn't matter. And so too it will be with blockchain or DLT. Technology is just going to enable what you're going to see. The next important ones are the D in DLT is for distributed. What are you distributing? And here, if you want to have great adoption, you need to have an alignment of stakeholders with the information that you're distributing. And so here the analogy is from farm gate to dinner plate. So I'm not going to get the guy with the machete in the farm speaking to the guy with the smartphone in a supermarket. But somewhere in between, I'll be able to gather an ecosystem of people which have different business models, are doing different things in the transaction value chain, but all have an improved process if we get together and we share the data and we collaborate. Think of that second panel, the point came up about what the information that the banks have and the information that the merchants have. When we can start to get those people together, then we'll have content that we can distribute. So the D is for what you're distributing and what the data is. L is the ledger. What's the structure of the ledger? What sort of information are you trying to put in there? And the T is the technology. And this, again, the technology is moving very rapidly. In March, we only saw the release of Hyperledger version 1.0. So there's a lot happening out there in this space. Am I going to go for Corda? Am I going to go for Ethereum? Am I going to go for Hyperledger? Each of these platforms has their own merits and needs to be considered just as part of the technology stack as you're going through. Next generalization, not everything will be distributed. So it's the information that you decide to, there will be some information which will be centralized, some which will be distributed. I would say permissioned is the way to go. We like to know the counterparties that we're dealing with. So then the next thing is the business models, and we see a variety of business models taking shape. Now, I sort of cluster them into three different types: consortia, vendors, and owners. Now, the consortia model, I think, has the best chance of success. It's slightly more complicated, and the critical thing with the consortia model is getting the governance structure right, and that's a point that I'll try to conclude on. The vendor model, we've seen lots of people out there, but if you're a vendor and you're coming with, and you walk in and you say, hey, I've got this great DLT solution, well, that's great, but what is distributed and why is that DLT solution any different from any other solution that you're selling in your technology stack? So I think you've got to be wary of the emerging business models. Or then finally, you can be an owner of something and you can say, okay, I'm going to build this thing on a great distributed ledger technology, but will they come? And so it's a high reward strategy, but also a high risk strategy. So given that those are the business models out there, how do we get good adoption? And so we've seen loads of proof of concepts, all very interesting, but any proof of concept is just point to point. It doesn't get the value of the network effect. And it's those business models that come up and have the network effect and allow additional participants to come in are going to have the right governance structures, are going to be the successful ones. So what don't we like about Bitcoin? We don't like the governance structure. We don't like dispute resolution. If something goes wrong, how do I get my coins back? How do we address that in standard capital markets business? We do that through good governance, and we do that through a strong legal framework. So I think that they're the things to look for when you're approached with this. So what are we going to end up with? We're going to end up with a new vocabulary. So we're familiar with central market infrastructures, CSDs, CCPs. Well, now we're going to have a whole new vocabulary around DLT. It's going to be about the ecosystems and the new ecosystems. I would also say don't boil the ocean, and that was again a theme that came out this morning. You can only chase so many rabbits at once. I would ideally stick with just one. The other thing, I just wanted to say that DLT is here, and I've noticed that time is already against me. DLT is here, and it is now, and I think we will see something come of it. Now, we've got things happening in Australia, digital asset, and their effort with ASX. I think that there is too much committed in that for there not to be some implementation that happens there, although it may be what they call an edge case. We've seen evolving model. The other one that I'm watching with interest is Kynetix. We see a transfer of value there, so I think that will be very good. The other thing that I look out for is there's a lot happening in the gold and the bullion market, but it seems to me that marketplace is crowded with too many operators. To have the best network effects, you're going to want to have some level of concentration as well. So I think too many cooks can spoil the broth as well. So really, I was going to go into, and then some about the revenue models, but I see I'm up against time. So I suppose, are there any specific questions that anyone would like to ask? And how am I, and is there... Just on that, you know, the switching, that was another point that came up this morning. And I think to switch, why would I adopt this new technology? Well, there's got to be, and there was a lot of talk about the win-win scenario, there's got to be a reason for me to want to switch. And so that's going back to question one, what is the value proposition of the technology that you're bringing? And why would I do that? So, yeah. The other thing I would say is within the ledger, data is going to be value. And so there will be changing business models. So the ones that look at a new value proposition when they're presenting that win-win solution, I think will be important as well. I had another slide here. This was just about the emerging ecosystems. And this was one that was put together by ITE. And what frustrates me about this type of slide, and you can see it, is there is so much happening within the community, but there's no categorization of, is somebody a fabric? Are they providing a DLT framework? Is somebody a vendor? Is somebody a consortium? What are they doing? Sometimes the one company will have the same name for both their chain and their vendor offering. So this is what I talk about with being familiar with a new vocabulary. And all of this is shaking out as we talk. Any questions? I can carry on and on and on. I'm just conscious that I've hit my time. So the other things that I would say is what we're already we've seen stuff with the Winklevoss brothers and their attempts to set up an ETF to have a Bitcoin ETF. What is happening is cryptocurrencies as a whole are now recognised as an asset class. So people want exposure to them. There's a couple of websites out there, but one that I frequently use is coinmarketcap.com. Now there you can see, in excess of 300 different cryptocurrencies and their market caps. The top 5 are the ones to watch, but people want exposure to cryptos at the moment. So so why is DLT relevant? I think the mere fact that people are investing it, and that's where the smart money is going, shows that question is not even, that question is overcome by events. DLT is here, it's now, and so the question is, how will you be embracing it? How will you be going around the adoption? So there I would say the questions are going to be around what is the business model, what are you looking at, and what are you key? What are you distributing, and who are you distributing it with? And I suppose the other thing I want to mention, the changing dynamic of data and data ownership, and how we want to permission and how we want to share that data. So another analogy I use is where if I want to go to Alton Towers and go on a roller coaster or a ride, there is so much information that I am prepared to share. Typically, I would show my passport, and then they would say, all right, you satisfy the age criteria and you satisfy what other identity criteria that they may have. But really, what do they need to know to put me on that ride? And they just need to know my age, my heart condition, and my weight for, I don't know. So, and if I'm prepared to release that data, I can say, all right, well, I will surrender just those pieces of data in return for entitlement. I don't need to give all this other information. So I think the new generation is saying, okay, it's my data and I choose how I'm going to share it. We're also going to see increased value in that. So I go to a merchant, and the merchant typically says, oh, great, will you sign up and will you give us your email address and all this sort of stuff? Well, I'll say, no, I don't want to have any more, I don't want any of your spam. But what I might do is if the merchant says, well, look, I know you've bought a nice pair of shoes here today, I will give you X% off if you give me, in exchange for your email address or in exchange for certain information. So I think that's the model where we'll say, okay, I permission you with a little piece of my data in return for what you can give to me. How do you store all of that information? It's got to be on a ledger and it's got to be shared. So, thank you.
So blockchain, in its essence, is a distributed technology. Currently, the business model for many people in this room, I'm guessing, would be about storing data very, very centrally. The more centrally it is, the more secure it is. You can lock that data down in a very, very secure place that no one else can access. For blockchain, then, the big issue here is inertia. How do we change that mentality from being centralized to actually improving security through distribution? So that's a real kind of mental shift from one side to the other. How would you suggest approaching that?
Yeah, absolutely. And the question is disintermediation. And then we see all of the central market infrastructures like NASDAQ coming up and saying, hey, look, we've got a proxy voting solution. But again, the problem that I would say with the NASDAQ solution is, again, it's centralized. They've centralized that ledger on that platform. So and Broadridge has done a similar exercise where they've bought a fintech company and then they've said, okay, we now have. So how do you get around that? I think the hardest, that's where the graft is. That's the hard yards, and that's getting the people, sitting them down in a room and knocking their heads together. So the first thing to do is to get together, and it's interesting. A lot of the stuff happening in the blockchain space. Yes, we've got a group of particularly bright technologists there, but we've also got a group of good, old, solid, bread and butter business analysts, workflow managers, project managers that are going along saying, okay, this is the transaction flow, this is how it works, this is the information that we want to distribute. So when you get those people in the room, it's about getting that alignment. So there's the first wave is, it's pretty easy because everyone has the FOMO, the fear of missing out. So they all come along and they all say, oh yes, we're all very interesting and we all want to participate. It's at that point that's critical, that getting those people together and saying, okay, we're aligned. Now, there's not everything. Some things you are going to want to maintain and preserve, and that's price advantage or whatever. Particularly in commodities, we see a lot of price advantage. But there are some things, like just on a simple bill of lading, just getting the name, continuity and name and address and title, KYC stuff, is so simple and so commoditised and not differentiating between all the people in the room that you can get consensus on something like that. They still might want to maintain. So there it's about, then you get the alignment of the different actors in the room. Now, you can't have a guy walking around with an electronic ledger in the middle of a fuel plant, because electrics and fuel don't tend to mix so well. So there are still, hiccups in terms of the practical implementation and practical adoption. But I'd say the first thing is get the people around in the room, work out what you're distributing. That will then kick up, well, what's the business model? What data are you going to share? Who owns that data? And how are we going to and that data will be monetised, as we know stock exchanges do so very well today. So I think that's your answer. Then once you have that governance structure, then you're away. Then it's just plug in the technology and plug in the other bits.
Hello, many thanks for the presentation. Although I am a co-founder of a company who already integrated to the blockchain technology, we have some doubts about the future of this technology. Let me explain why, and I would like to ask you, what do you think about this? For example, the value fluctuates. Today, nobody accepts blockchain logs as a formal evidence in courts. What are the risks for the future of this technology?
Context. Context is key. And so the central banks are looking, central banks, ECB, they're all looking at blockchain with real intensity and real focus. So how is ASX going to go around adoption? So ASX is just taking blockchain as a piece of their technology stack, but ASX already has a rule book, already has a legal framework, and then they're saying, okay, you're using this technology, but everything that you do in that technology is under the existing ASX rulebook. So straight away I have dispute resolution, straight away I have recourse, I have all of those good things, that transparency. So I would be very encouraged by the technology, but it is the context and the application of the use case that is critical. And so who wants to accept that final record as the finality around that record? And so that's why I say the best solutions tend to be those that are permissioned. If it's something that's entirely open, like the blockchain network, then it gives me less ease and less path of recourse in the terms of dispute. Whereas if I'm dealing with a known consortia and we manage this chain amongst ourselves, then I think we've got a much better chance of success and much more faith and confidence in the data structures, the data models, and the resolution. What happens if we want to increase the block size? What happens if we want to do all these sorts of things? So I think it's better to be managed in that way. So I would say it's the decoupling from what's happening in the Bitcoin world. It's the application of the technology. It's the context for the users. It's the governance arrangement around that, and that will bring the legal certainty and finality. Persevere. Is that okay? I was
I used to be an active Magic player, so I really focused on your presentation as well. So thank you for sharing my ideas.
No, it's, I'm just conscious of time.
Thank you, Scott. Thank you.